So welcome everyone. This is the last session or session 12 as we planned of the Moneywise Learning Financial Education for teens. The idea was that when I started this, school teaches you a lot of things, but personal finance is not a strong point that is taught in schools. And I wanted to do this so more kids learn about personal finances and everything that's important for you as an adult. Especially money management tends to be one of the weakest links in most people's sort of arsenal, because they learn a lot of things in college, but they don't learn how to manage money well. So I wanted to equip you guys with a little bit more understanding of money and assets, liabilities, and all the topics that we've covered so far. Today, we'll be talking about investing. Like I mentioned, this is an introductory course into what is stock market trading and what is real estate investing all about. And we'll close the session with a little topic which is very important. It's called diversification. So we're going to talk about a diversification, and then I'll introduce you to some new virtual trading platform that we have. And you guys can go there and start trading virtually. And I recommend there's a course online. That's why I kind of didn't want to spend too much time teaching you about stock trading, because there's so many courses online to do that. And they're beginner level courses. So it's very convenient for you guys to just take it online rather than for me to reinvent the wheel here. So I recommend, and I sent the link out already, but I'm going to share the links again to those courses, to actually one specific course, and then to the Moneywise Learning Stock League that we've set up. So it'll be sort of a competition, the Stock League, where you'll be competing with each other, and the top 3 people who trade and make the most money will win the league, okay? A few house rules. Please ask your questions in the Q&A box. And I don't want to go back and explain a specific slide for one person, because it kind of interrupts the flow of the webinar. So I will, if you have any specific questions, just ask that in the Q&A box, and I'll get to it at the end of the discussion rather than break up the discussion while I'm going through it. It kind of throws me off and throws off the flow for the rest of the folks. We will get to the questions, as I mentioned, at the end of the discussion. So what you will learn is more like, what did we learn here? This is something I shared at the beginning, and I've been tracking it. So we talked about assets and liabilities, balance sheet, income statement, the first session, and we talked about loans. We talked about interest on money. We talked about why we need insurance. We talked about credit scores. This is a very important topic, and we had a guest speaker who is a credit building expert, Renee Lane, come and talk to us about credit and credit scores. We talked about credit and debit cards. We talked about college admissions with a guest speaker and college admissions expert, Jeb White. All of these, I don't want to read through all of them, but all of these are online on YouTube, Cherry Street Investments. Please follow us, subscribe to us, and you can look up all the recordings online. Last week, we talked about budgeting, and today we're going to talk about investing. Specifically, we'll talk about stock market and real estate investing. My team is Anar and I. Anar has been doing the webinars for ages 5 to 10. It's a little bit scaled down version of these webinars, and I'm doing the webinars for ages 11 to 18. Last week you had an assignment, and I think I reviewed it with the folks who have been attending these classes. So I got about a 57% of the folks who did the assignment, and some parents have a monthly budget for their family and some parents don't. What I encourage you to do with this assignment is, if your parents don't have a monthly budget for the home, then offer to build one, because you're going to learn a lot from just what your parents are doing in the household and tracking their budget for them. It's going to really help you when you start doing your own budgeting once you grow up. So some of the lessons learned, I think folks shared yesterday, is that you should have a budget. You should track what you're spending on and track what you're saving. It's important, right? So we talked about this last week, and I just wanted to do a big recap, a quick recap rather. Budgeting is all about, budgeting is not, contrary to what people feel, budgeting is about cutting back on spending. But I look at it as, it's not cutting back on spending, but it's just planning and tracking where you're spending, what you're spending on. And also it enables you to save, or what I call pay yourself first. So paying yourself first is really, really important. So I encourage all of you to just transfer a certain amount of money to your savings account before you touch the money that you have, because as much as your pay increases, your needs and wants increases as well. So this is just a rough recommendation of how I do it for myself, where I save between 20 and 25%. I've actually saved up to 50% in some cases, depending on what I was doing and how much I earned. So I encourage you to maximize the saving, give to people who need 5 to 10%. I would say 10% should be your minimum, and then spend the rest on your needs and wants. We also saw last week that housing is one of the biggest expenses most people have. So you really can't get away from this expense. And especially if you live in expensive places like California or New York, your housing will be even a bigger portion of this. With remote work, I'd say, move to a place where you don't have to spend as much, so you can actually save on housing quite a bit. So today's lesson is on investing. We talked through a few of these yesterday, but I want to just quickly do a recap here. And for folks who haven't been there yesterday, I am not sure why you cannot see the top of the slide. Does everybody have a problem with seeing the slides? Okay, we'll just keep going. So what is an investment? Anybody? What is an investment? We talked about this yesterday. Allocate money in expectation of some benefit in the future. In finance, the benefit from an investment is called return. Pretty good. It's a simpler way of saying putting your money to work. So I told you yesterday, you usually go work for money. When you have a job, or even when you're self-employed and running a business, you are always putting in your time, and in exchange for your time, you get paid money, right? But investment is the act of putting your money to work with the goal of earning income or appreciation, or both, right? So there's various ways you can earn income and appreciation in different investments, and we'll talk about that today. The investment is also oriented towards future returns, and so involves some degree of risk. So there's always this risk return yo-yo. We talked about this yesterday again, but the idea is that whenever you're promising something in the future is uncertain. So there's always an element of risk in the future. So what are the different types of investments? We have very conservative investments like cash sitting in your bank account, money market account. Could you leave all your money here? Probably not a great idea, because return is really, really low. And so it doesn't even keep up with inflation, which is the cost at which things increase over time. So you definitely don't want to leave all your money in cash. You have fixed interest like CDs. We talked about this in the first two sessions, I believe the second session, the certificates of deposit. So it does earn fixed interest, but both cash and fixed interest accounts are probably paying under 2 or 3% right now. So not a viable option for you to invest really, and to make any good deal of money in the near future. Then we have real estate, residential, commercial. I'm primarily a real estate investor, so I do love this asset. Like I said, all of these have their own merits. You don't want to do all your money in one, although there have been people who've been very successful doing that, but then you have that risk of losing it all. We have stocks. A lot of people are been trading stocks lately. I have been doing a little bit myself. We have precious metals. We can do gold, silver. There's a lot of metals out there you can trade. You can trade oil and gas. I'm not exhaustively listing all the different types of investments, but needless to say, this is probably the top 5 most used investments by real estate, but by investors in general. Yesterday, we talked about the risk return trade-off. This is very important for you to understand that there's always a trade-off between the two. Whenever you look at a low risk investment, it's likely not going to give you a high return. So bank and CDs and stuff are low risk, where the money is sitting in your account. They are likely to produce only low returns. Whereas you go to the other end of the spectrum, you have, let's say, the stock market. Actually, within stocks, there's something called option trading. Options are super high risk, but you can make 100% returns in options. So I've been trading options, and that's how I got started in the stock market. I started trading options. I made a lot of money, and I lost a lot of money as well. So overall, I came out ahead, but I realized that it's very high risk, and I need to put that money to work somewhere else. And that's how I got started in real estate. So return on investment. So return on investment is a very important measure of how effective an investment is. Very simply, it's the amount of money you put into the investment, the current value of the investment divided by the cost of the investment. So let's look at an example. I bought a share of Apple. This is a stock ticker for Apple, and the cost price for Apple is 300. The current value of Apple is, let's say, 330. This is hypothetical. Uh-oh. I don't know what happened there. Let's see here. Sorry about that. Give me a second here. All right, let's just go back there. So your return on investment on this investment is 330, which is the current value minus the cost of the investment, right? Divided by the cost of the investment. So it's quite simply 30 divided by 300, which is 0.1. And if you want it as a percentage, you multiply times 100. So that gives you a return on investment of 10%. Are there any questions there? Can't see my screen. Okay. All right, let's try this again. I hope I'm not having issues again. Can you guys hear me okay? Okay, so coming back to return on investment. Any questions here? It's fairly straightforward. I know yesterday there were some questions on return on investment, so I just wanted to clarify that. So it's basically the gain you have, right? Divided by the value that you paid for the investment, that's your returns. So I have a question for you guys. Could the return on an investment be negative? Yeah, if yes, why? How? How can it be negative? Yeah, exactly. Ria said the asset can lose its value. So if, let's say I buy Apple for 300 and it drops to 270, I lost $30 per share, right? So I could have a negative 10% return instead of a positive 10% return. Okay. So stocks everything can go both ways. Real estate can go both ways. Stocks can go both ways. So not every investment you make is going to be positive. Sometimes you lose and sometimes you win, right? So the idea is that overall, it's going to, you hope that you win more often than you lose. So you come out ahead. Okay. So let's talk about stock investing. So what are stocks? So companies sell shares in their business to raise money. Then they use that money for different initiatives. So let's say I'm Apple and I want to do some more research on setting up the new iPhone, like the new iPhone 12. Now I want to put some more money into that research. I might sell more shares, or I might create more shares in my company and sell it to public. Now the public now owns a part of Apple in return for getting shares of the company, right? And I have, as Apple, I have raised that money for my initiative. So when you buy stock of the company, you buy an ownership share in the company, however small it is, right? It doesn't have to be a large share. So you might own 0.0001% of a company, but you still own some part of the company. So investors own the stock to earn a return on their investment. And that return can come in more than one way, and we'll talk about that. So yesterday I played this video on I'm having trouble still with things here. So let's see if I can share this video on YouTube directly, because I have this live slides plugin.
What is the stock market? Presented by WallStreetSurvivor.com. This is Jimmy. By WallStreetSurvivor.com. This is Jimmy. Jimmy is from Miami. Jimmy is a baseball fan and has a huge baseball card collection. Jimmy, the smart boy that he is, realizes that his card collection is very valuable, especially since his Derek Jeter card has skyrocketed in value. Jimmy wants to sell his cards to buy a new skateboard. Jimmy figures his best bet is to set up shop at the local flea market, which is a place where buyers and sellers meet to exchange goods. Buyers try to negotiate with sellers to get the best possible price, but often buyers and sellers meet somewhere in the middle. Mike, a huge sports fan, spots the Jeter card and asks little Jimmy what the price is. Jimmy responds that it's $100, and Mike says that he will give him $80. Jimmy suggests they meet in the middle and settle on $90. Mike agrees, and the transaction happens with both parties satisfied. A flea market is a lot like the stock market, but instead of people selling products like baseball cards and pottery, the stock market allows owners to sell their shares of companies for cash. The price of the shares depends on supply and demand. How many people want to buy that stock versus how many people want to sell it. Often, just like in the flea market, buyers and sellers meet in the middle. Say, for example, you own 100 shares of Apple. It is trading at $300 and you're willing to sell it for $305. You call up your stockbroker and tell him to place the order. The broker won't sell the shares until a buyer is willing to meet the asking price of $305. He calls his contact who works on the NASDAQ trading floor in New York City. Every company on the NASDAQ has a stand where they are selling shares of their stocks. Buyers come to the stand and post their bid, which is the price they are willing to pay. If there are no buyers at that price, the seller can drop the price or the buyer can increase their bid. The stock market is made up of transactions like these, which happen millions of times a day in thousands of publicly traded companies. Today, most of these transactions happen electronically, but the concept is still the same. Just like Mike bought the Derek Jeter card from Jimmy at the flea market, you can buy stocks from publicly traded companies on the stock market. Are you interested in buying stocks? You can learn how risk-free on WallStreetSurvivor.com.
So you guys saw the video. We are actually using Wall Street Survivor to do our virtual trading. So that's the platform we'll be using.
So what we are going to be talking about is how to invest in the stock market for beginners.
Give me a second.
I've invested a lot of my money. In fact, I've invested most of my...
Yeah, I have the YouTube playing the next video in the series. All right, can you guys see my screen? Just want to make sure before I keep moving ahead. Okay. Okay, so how can people make money on stocks? How do you make returns on stocks? So investors make return on stocks in one of two ways, or both ways, not one of two ways. The stock price could appreciate and they can sell that for a gain. Now they can also lose money. The stock price goes down and they could lose and create a loss, right? The other way is for the stocks that pay dividends. These are payments made to shareholders of the company's earnings, and they're typically paid quarterly. So not all stocks pay dividends, and some of the stocks do. And this could be a great way of you to make money while you hold on to the stock, because normally when you hold on to the stock, you're really not making any money. So you buy a stock and then you sell the stock for higher. That's when you create money, right? But let's say I keep holding on to a stock. If you don't have a dividend stock, there's no way you're making any money. You only make money in a transaction. But a dividend stock gives you money while you're holding on to it, because they pay quarterly dividends to all their shareholders. Large companies like Microsoft or Johnson and Johnson, and a lot of those companies pay dividends, but not all companies pay dividends. So you have to figure out if you want to be a dividend stock buyer or you just want to buy and sell stock for a quick gain. Any questions on the stock market investing so far? Rohan, the class is an hour long. We started at 2 p.m. Central. We'll finish at 3 p.m. Central. Okay. So let's talk a little bit about real estate investing. Like I mentioned, I'm not going into a lot of depth for stock market investing, like how do you go trade? There's something called technical indicators where you actually look at the stocks and the charts for the stocks and figure out how the chart movement is. Then you're reading the news of what's going on in the market to determine when you want to buy. See, I personally don't think it's a great time to buy in the market because everything is really overvalued. So I'm pulling back all my cash and only trading short term, like I buy and sell within a few days. But I'm not doing any long-term investments in the stock market right now because I feel extremely overvalued and I want to really wait for a correction to come into the market where stocks will dip down before I go in and put in a bunch of money for the long haul, right? So everybody has a different strategy in the market. You could actually even bet not just on a stock appreciating or increasing, but a stock going down, and it's called shorting, right? You're basically saying, hey, I bought Apple for 300, I'm going to short it and say it's going to go down. So there's different ways to trade where you're betting on a stock going up, you're betting on a stock going down. You are doing something called an option, which is an ability to buy a stock at a certain price, but it is not buying the stock actually. So it's very involved and there's a lot of different terminologies there. So we'll go to Wall Street Survivor and I'm going to share some resources with you to learn more about those. So we'll keep that offline and away from this class. So I want to talk about real estate investments. This is primarily what I do for a living now. And even though I started in software, I moved into real estate investing 10 years ago and I've never looked back. What I like about real estate investments is that it's very stable. The stock market can be all over the place, right? It's called volatility, or it goes up and down all over the place. But the real estate market is quite stable in comparison. Sure, we have had corrections in the real estate market, but it doesn't go down in 1 hour or 1 day or whatever, right? It takes a long period of time. So that gives you a lot of ability to prepare for a downturn. So you can invest in real estate, residential real estate, which is like a single family home, let's say another home in your neighborhood or somewhere else. You could invest in multifamily homes, which is more than one home under the same roof, like it's called a duplex or a triplex, depending on the number of units it has. A duplex is 2 units, a triplex is 3. You could have a quadplex, which is 4 units. Then you have apartment buildings. After a certain number, let's say 10, 20, you could have a bigger apartment building. So primarily, this is what I do. I work in the apartment industry. So we buy apartment investments with our investors, and then we rent the apartments out. Then there are other commercial investments. I think this picture is a little bit off because everything like apartments, industrial, retail, they're all considered commercial. Once we exceed 5 units, it's considered a commercial investment, 5 units of living space. Retail is like, let's say you have a grocery store where your Walmart is, or where you go get your haircut. That's kind of like a retail strip mall. You could have REITs. They are real estate index, real estate investment trust. So essentially what a REIT does is it goes in and buys a bunch of different investments, and then it combines all those returns and gives its investor a certain percentage. Is that very high? No, obviously not much high, not very high compared to what the REIT is actually making. So there's a lot of fees involved in the REIT. So let's look at a quick video for real estate investing for beginners. I especially like this one because it gave a very quick idea of how real estate investing works. So I think I know why this is not working. Give me a second here. I have to do this whole stop share and start share business here.
Have you ever wondered how real estate? It's an important question. Among how Have you ever wondered how real estate investing works? It's an important question. Among houses, apartments, offices, hotels, and industrial buildings, there's over $35 trillion invested in real estate. But how does real estate investing really work? Fortunately, the basics are pretty straightforward. Let's look at a simple example. Imagine you purchase a house for $500,000, which you plan to rent to tenants. Typically, for a $500,000 property, your investment includes a 20% down payment, $100,000, and an 80% mortgage, $400,000. We call this $100,000 of equity and $400,000 of debt. To simplify the math, ignore closing costs for now. Congratulations, you own a rental property. Now what? Find your tenants. There's a similar nearby house that rents for $2,500 a month. You match that. That's $30,000 a year in gross rental income. Once the cash is flowing, your total return is that amount minus expenses and mortgage interest, plus the change in your property's value over time. Let's walk through that in more detail. You have to pay your property taxes and insurance, as well as some ongoing operating and maintenance costs. Let's say $5,000. Mortgage interest is your other major expense. Your $400,000 mortgage might have a 4.5% interest rate. That's another $18,000 in costs. So $7,000 a year in residual income. $7,000 divided by your $100,000 investment equals a 7% annual return in cash flow. For simplification, we're ignoring things like income tax and depreciation, but there's more than just cash flow. You can also benefit from potential appreciation in both the rent and property value. The industry rule of thumb is 3% per year of appreciation. Altogether, you might make 7% a year in rent and 3% in appreciation. That's a 10% annual return over the long term. For comparison, the stock market has an average historical return of about 8% return a year. In fact, real estate has outperformed stocks over the past 30 to 40 years. But not everyone has the time or money to be a landlord. That's why Fundrise has built the first easy-to-use.
Okay. So that gives a very good gist of what real estate investing is about, right? And let me share my screen again. So the idea is that real estate investing can give you returns, but the returns are very different from the stock market. Yes, there's an appreciation factor involved there, but you don't sell and buy and sell real estate like you buy and sell in the stock market. You usually can do that, like they're called fix and flip, right? You buy it at a low, fix it up and sell it high. But a lot of people buy real estate and landlord it, like the example talked about, right? You buy a house, rent it out, make money in different ways. So when in that example, they talked about how you can make 10% real estate versus, let's say, 8% in stock market or whatever. The other important thing to understand is that the gains or returns from real estate is usually tax-free, whereas when you take the returns from a stock market, you usually get taxed for it. So when you take away another 25% in taxes, you actually get net effective returns from stock market actually goes down. So you'll have to make much more in stock market to keep up with the returns in real estate. So that's something to keep in mind, because I have a lot of people who say that, you know, why should I invest in real estate? The returns are not great. But when you compare it to the stock market and you adjust it for taxes, that's when you're really comparing apples to apples. So real estate investors can make money in 4 ways. One, your rental income also pays down your mortgage, and that's something they didn't talk about. They only talked about the cash flow after paying all expenses, but your mortgage is also getting paid off. So you're creating equity. And we talked about this word. Equity simply means you're creating money inside the building, inside the house that you bought, which means you're increasing the amount of money you have inside that building. Your property can appreciate and decrease, or appreciate or increase in value. So you also increase the equity. So he talked about that $100,000 you put down versus the $400,000 that it's worth. So if in that $500,000 example, your equity is $100,000, but your rental income that you're using every month to pay a mortgage is also increasing your equity. And over time, that kind of adds up, right? And similarly, the increase in the property values will also increase your equity position in the property. You also have cash flow, and he talked about that $7,000. That's pure cash flow from that property. And finally, you have tax advantages. It's called depreciation. And I'm not going to get into the details of depreciation, but the idea is that you're actually able to offset all that cash flow and not pay taxes on that cash flow from the property because of something called depreciation. So the idea of depreciation is that that building that you invested in, whether it's a house or an apartment or whatever, is actually reducing in value in the sense of a structure itself. And IRS allows you to take that money and apply it as depreciation. It's actually not decreasing in value, but it is from a structural standpoint because every building gets older with time. So you're allowed to take a certain percentage off every year for that building. So I don't want to confuse you guys, just understand that it's more a tax advantage rather than a real decline in value of the building. So just to summarize, let's talk about stocks versus real estate investments. I talked about stocks being easy. So if you have $10, you can go trade stocks. You can go to Robinhood. Robinhood is an app for stock trading. And you can probably trade stock like penny stock with like $10 or $15. Real estate, obviously, you can go buy a house with $10 or $15. But there are ways to do real estate that doesn't involve more money, but it still involves time. So there's something called wholesaling where you could go put a house under contract and then sell that contract to someone else for money, right? So let's say I have a house for $100,000 and that person really wants to sell the house. They're willing to give it to me for $90,000. Then I go to a potential buyer with that contract and assign the contract to them for, let's say, $95,000 and then collect the $5,000 difference. So again, very involved, but I don't want to get into the details of different ways to do real estate, but there are ways to do real estate without a very big dollar amount. But in general, if you want to go buy a house or buy a building, obviously your investment amount is much higher. With the stock, in the stock market, you can trade with as little as $5 or $10. Stability, and this is very important, stability is very volatile. It can change. The stock market can change day to day. Yesterday it was high, today it's low, right? So it's very inconsistent. Whereas real estate is very consistent. It can go down, yes. It does go down, but it also comes back up usually. As long as you buy it in a good market, in a good location, real estate does really well. It's a tangible asset. Is a stock a tangible asset? No, it's not. You just see a stock ticker on your online screen. Yes, you do have a share of the company, but it's not an asset. It's not tangible. You can't touch it. You can't feel it. Whereas you can feel and touch a house. So it is a tangible asset. Are there tax advantages to stock trading? There are none. Whereas there are tax advantages to real estate. Stocks are very liquid. What does liquidity mean? You can sell the stock tomorrow and get your cash back. Can you sell the house in a day? Probably not. It's going to be very hard. So we don't consider real estate as a liquid asset, whereas stocks are a very liquid asset. So we looked at this risk return chart before, and I really wanted to place all the different investments on this chart. So like I mentioned, the cash and bank accounts, FDs are low risk, low return. We have gold, a little higher risk, but pretty low, kind of medium returns. It depends on when you buy and sell gold. Very low risk though. I mean, gold is not going anywhere. You could lose money on gold or the value of gold might go down, but it's a solid asset, right? You hold on to it. You have real estate, potentially like higher risk than higher returns than gold, but still lower risk and not on the high risk end of the spectrum. Then we have stocks, which is the high risk end of the spectrum, and even higher risk than just trading stocks is trading options. So coming back to this point of diversification. So does someone want to tell me what is diversification? And this picture should give you a pretty good idea. Yeah, exactly. Not putting all your eggs in one basket. So why don't you want to put all your eggs in one basket? Let's say I have all my money in the stock market and the stock market takes a dive, right? And it's unpredictable. Like COVID happened, the stock market took a nosedive, and people sold when it took a nosedive, which is bad because now it came back up. But you don't know, right? You don't know how much more it can go down. So this is why you don't want to put all your money into one basket, and you want to buy different assets. And that the whole idea of spreading that risk is called diversification. So you reduce your exposure to any specific investment type. Instead, you put a little bit of money in all of the different investments, and then you don't want to put all your eggs in one basket. So that's the idea of diversification. So typically, when people talk about diversification, they always talk about diversifying between stocks, bonds, mutual funds. I'm not a big fan of that, to be honest, because it still involves the stock market and the bond market in some way. And that is not the only way to diversify. I would highly recommend you guys, when you start looking, diversify differently from what every financial planner out there will tell you to diversify, because they're not looking at real estate. They're not looking at precious metals. They're not looking at life insurance. They're not looking at a lot of things that the wealthy people do. So they found that in the middle class and the lower middle class, they actually middle class and the middle class put about 80% of their savings into stock market, and the wealthy people, the rich people, only put like 30 to 40% in the market, in the stock market, and the rest is in real estate and other investments. So think like a wealthy person and invest like a wealthy person, not like a middle class person. Don't follow the herd, because following the herd never gives you the returns you're looking for. That would be my big advice for you, and your takeaway from this should be that you need to look at real estate, start early. You need to look at life insurance, learn, and I'm happy to share resources if you want to learn about how you use life insurance like an investment, or rather like a savings account. There are stocks, there's bonds, and of course you want to keep some cash around because you do need emergency funds. You can buy precious metals and invest into precious metals in other ways. So any questions from there? Yes, Anirudh says, did you say stock has the highest potential return but the highest risk? Technically, yes, but sometimes what happens is over a period of time, people lose as much as they gain. And overall, they say that the stock market produces about 8 to 10% return over a long period of time because of the ups and downs. So sometimes you might gain like 30% in 1 year or 20% in 1 year and lose 20% in another. So it kind of nullifies it. Technically, shorts have the highest risk, right? Not necessarily. I mean, yes, you could be shorting the market. It's risky, but options actually have a highest risk. And we'll talk about options another time. Any other questions? Okay, so here's the league information. So we have a stock league set up, and I noticed a couple of kids have already joined the league. You can go to bit.ly/Moneywise League. It's a short URL for going to Wall Street Survivor. That's the website that I talked about. And the password is Let's Trade with L and T capitalized. Please join the league, and I will also send you an information about some education before you get started there, so you understand how to trade. The league will last for 3 months. Each person will get $100,000 in virtual money. And what's cool about this is you're actually trading in the real-time market. So your money and your virtual money is still trading and showing all the real-time information, and you're buying real-time into the market prices. There will be some prizes in store for the top 3 people. So please join the league and note this down. I will send this via email as well, but it's bit.ly/moneywise-league. All right, this is my big announcement. So I've set this panel discussion up for July 22nd. All of these 3 gentlemen, David, Chris, and Dylan, are under 25. They have started investing in real estate in their 20s or younger. I think David was 19 when he bought his first property. They are all worth, they have invested in millions of dollars of property. Like David Tupin, he's Austin based. He owns $50 million of real estate, and he's 24 years old. So age is not a huge consideration to make money, right? It's how willing you are to learn and how willing you are to get out there and start soon. So I encourage you guys to attend this panel discussion, and you can ask them questions, and they will be sharing how they got started individually and what challenges they had, what wins they had, how they navigated it being so young in the industry, because real estate is not full of young people, right? But if you are young and you are willing to work, you can really stand out in real estate. Any questions so far? All right, looks like there are a few questions. What is the bonus session? So this is going to be the bonus session. It's going to be a panel discussion on July 22nd, 7:30 Central. Why do you need life insurance? Typically, there's a question about why I need life insurance. Life insurance is typically used as a way to insure your life. So if something happens to you, the insurance company pays you money, right? But life insurance actually can be used like a bank account. It can be used like a savings account, and not too many people understand that concept. So there's a lot of books about that, and I'm happy to share it with you. If you're interested, message me offline, and I'll send you a book that I really like, which talks about life insurance. Questions? Any other questions? Okay. All right. So we have a short quiz. Are you guys ready for the quiz? Give me a second. I'm just loading the quiz. Can you guys see the screen? Please join myquiz.com. Game code is 146057. So for those of you who are joining us for the first time, we will have a $5 gift card, 2 $5 gift card, one to a middle schooler, one to a high schooler, or if 2 middle schoolers win, then 2 middle schoolers will get that to Amazon, Steam, or what was that, Starbucks. So whoever tops this quiz will get the gift cards. You guys ready? I see only 18 people and there are 20 or 30 people on the participant list. Where are the rest? Is anybody having trouble getting in? All right. I'm still missing about 10 people. What do people join real estate? I'm not sure I understand the question, Anonymous. Who's missing on the quiz? Anybody missing on the quiz? All right, we're going to get started. Yeah, unless if you're having some trouble, please type it in the chat box as soon as possible. Or I assume you're not joining a quiz. Okay. Shri says computer is slow, so trying to join the quiz. Okay. Okay, I'll give you a minute because we have 10 more minutes before we wrap up. So want to be mindful of everyone's time. Edith, you can go to joinmyquiz.com. You can type it in your browser and then it'll ask for a game code and you can type that game code 146057 in there. Hey Shri, I see you there. So go to your browser window and type joinmyquiz.com. Okay, I'll get people started. If people want to join in, you'll still have time. Okay. Okay, people are still moving, so I'll let people finish up. It's like 20 people are done. We have 4 more left. Good job, Layla. All right. I think we pretty much have our winners. We have Kaushik. Are you in middle school or high school? Yeah, I can mute the music. Give me a second. I'm trying to figure out how to mute the music here. There it is. Okay. Middle school. Okay. Kaushik and Ria are on the top of the leaderboard. So please email me after. Ria, I think I have your email. Kaushik, I think I have your email too, but just email me and just remind me what gift card you want and I'll send it your way. The questions, let's see. There was last time there was a cool way to review the questions, but I'm not seeing it right now. So I don't know why. All right, let's just quickly walk through it. So investment is an act of putting money to work. Yes, of course, it is that active, that's true. But an investment is higher risk, the returns are generally higher. If you bought 1 share of Tesla for 600 and then Tesla released a new car, it had great sales and the stock went up to 900, I believe the return on investment will be 50% because you made $300 for your $600 investment. So it's a 50% return. All of the following are reasons to invest in real estate, except it's not volatile. Real estate is not volatile. It's not like the stock market. So it is a tangible asset. It does appreciate and it has tax advantages. An investment is liquid when you can easily turn it into cash. This is true. Which of the following is not a type of real estate investment? Anybody? Most people got this correctly, so it's shares of a company. Rohan, yes, if you want to leave, you can. I would prefer you stay till the end, but that's fine. So we will not be meeting next week onwards. If you guys have any questions about the stock league, you're welcome to email me. I just want to do a quick raise of hands. Who wants to learn more about stock investing? You want another class on stocks? I don't know why I cannot see the hand raise here. Huh. Okay, just type me. I see 3. Okay. Okay, so if you want to learn more about stocks, then message me separately. I'll see how many people I have and whether I can put something together. I need to have enough interest to put some time into it. But otherwise, I recommend, and I will share online resources for you to learn, right? Which of the following is true about a stock investment? It is a low dollar investment. This is true, right? Not liquid. No, that's not true. It is actually a liquid investment. It is easy to buy, but it's not a tangible asset. So this is not, this is the right answer. Real estate investments can make money in all ways except, so which one can it not make money? None of the above. It can make money in all these 3 ways. Stock market investors cannot make money in which of the following ways? So they cannot take advantage of any taxes. They can take advantage of dividends. They can take advantage of increase in stock price. Diversification is not which one of the following? Not, right? It's a smart way to balance risk and returns. Yes, it is. Putting your eggs in multiple baskets, that's what it is. Lowering risks by spreading your money across different types of investments is true. So the only false one is buying a lot of high risk investments so you can make a lot of money. So this is the only thing diversification is not. Okay. Let me quickly share one more thing before you guys go. So thank you all. First of all, this is our last class. If you have winners on here, Kaushik and Ria, please email me and tell me what gift card you want. I just wanted to do a quick poll. This will be our last class, and I've enjoyed having all of you for 12 sessions with me. Some of you have joined every session, so thank you for joining, and I hope you've learned something through these classes. And I would love to hear ways we can improve these classes, because I hope to do more of these. So my goal is to have maybe shorter classes, like 15-minute segments of videos on YouTube that is easily consumable, where you don't have to sit through 1 hour of classes. Please share it with your friends. Please go to YouTube and share the link with your friends, because I hope that more kids are educated, more kids understand finances, and more kids learn to manage money better. It's been my experience. I've been a landlord for 10 years, and I've seen a lot of credit reports, and trust me, they haven't been pretty. So I want to make sure that the next generation, which is you guys, learn how to manage money, learn how to do these things better, so you don't have the same issues that I've seen. And we talked last week, 78% of Americans live paycheck to paycheck, and that's not how you want to live. Trust me, it's not how you want to live. You want to live in a way where you can save money, you can spend on things which are important to you, but at the same time enjoy life. So the only way you can do that is by managing money better, because money is the root of a lot of conflict in, across the board. People are stressed and upset about money all the time. So we don't want that in your life. So please answer this poll really quick, and thank you all for joining. This will be our last session. Thank you again for sticking with me for 12 weeks. So please answer this poll if you could. I'm just sending a short poll. Cool. Thank you, everyone. Again, if you want to join us on Facebook, we have a Facebook group called Moneywise Learning, and we will keep updating things on this Facebook group. And like Ria Jane, she's on the call today. She's doing a business program for kids, which is a 9-week session on where you can actually go learn how to set up your own business. So these are kinds of things that I'm very passionate about, and I want more kids to do. So if we have programs in the future, if you sign up with this group, then I'll keep you informed on new programs for kids. And also when I release the new videos for on YouTube for Moneywise Learning, there'll be shorter videos, like 15, 20-minute segments, where we'll cover a lot of the same things, but in shorter clips. So please share it with your friends. It's Cherry Street Investments on YouTube. And we'll have a lot more education on there. Thank you all again for joining me and for being with me for the last 12 weeks. Have a great evening. Pari asked, can I join that class with 9 kids? Please check with Ria. Pari, I can share Ria's details with you offline. Please email me, Pari. Thank you all.